Market wrap. Let's do the market wrap. Well, stocks closed lower after an aborted rally attempt. We're starting to see selling into the rallies now. Okay, these rallies are not being sustained. Every time the market pops up, you see the selling emerge. We haven't had big down days, but don't worry, they are coming. I had a conversation with a guy today who told me, Mike, you got it all wrong. This is 1996 all over again. This is when Alan Greenspan uttered his famous line, irrational exuberance, and the market continued to rally for another 4 years. I said, well, I don't think that is true. The rally in the stock market after 1996, remember, you had the internet boom, which happened, and you had the Y2K, which is, you had all these firms in the country, in the world actually, retooling their technology for the changeover to the new millennium. And there was a big scare. Remember, they were saying, well, the airplanes are going to fall out of the skies and everything's going to go down and, there's going to be a global disaster. So everybody was switching over their IT systems. And, of course, nothing happened. But that was a big, I guess, partially fear-driven private sector investment boom going on to shift over. And the internet developed at that time. So you had a big boom there. I do not see it like that. And I understand. He also said, well, people are very, very enthused and excited about Trump and what he's going to do with the fiscal plans and the tax cuts. And that might be true, but that we have seen a very big rally since the election. Don't forget, and I've said this many times, the night of the election, they sold the stock market down 800 points. And Trump's policies and proposals, it's not like he got elected and suddenly came out with something brand new. He had been saying that all along. As a matter of fact, if you really want to have this discussion, he has changed the tenor and the proposals quite a bit. I mean, now it's all about spending cuts. He's even open this Mickey Mulvaney, his budget director. And by the way, we see now his cabinet picks and the people who are staffing his White House staff, guys like Mickey Mulvaney. The guy is a total debt and deficit hawk, a fiscal hawk. All right, so Trump now he's putting through these spending cuts to quote unquote pay for the military spending. At best, the budget is neutral. It could be even negative, slightly negative. We see no growth really in federal spending. I talked about that in a couple of videos ago. So you had this big rally in stocks after the election, presumably by the same people who sold it on the night of the election or the 3 months leading up to the election. Remember, from August to November, the market traded down. So you had a big rally now. And a lot of the expectation is starting to unravel. Maybe not a lot, but some of the expectation, people are starting to question now, like, when is that tax cut going to happen? Could happen next year. When is the infrastructure spending going to happen? And that's not going to be some big Eisenhower, let's build the interstate highways. This is a public-private partnerships. That's very kind of fuzzy what that, what the degree or the size of that. There's not going to be a big, deficit spending program to rebuild the infrastructure. So the people are starting to get hip to this. Not a lot of people, believe me. As I said earlier, I am always way out there in front of everybody else. I called I've been telling you about the slowdown in the fiscal flows. I've been telling you that the economy is slowing down. We now see, just now, the Fed starting to come towards my forecast, all right? They're saying 0.9. Last week it was 1.3. They already dropped it almost in half. Now it's down to 0.9. I'm saying 0.7 to 0.8 if we're lucky. We could be flat. We could be zero growth in the first quarter. So I don't think it's 1996. I think it's more like March 2000, and that's when the stock market peaked out big time. But, we'll see soon enough. But the thing is, if you look at the trading action now, They're starting to sell the rallies. All right. Before it was all about buying the dips. I don't like to get too, dependent on the technical. The technical aspect of the market that I like to look at is what I call market composition. Who's in there, the size of their positions, who's the strong hands, who's the weak hands. That has always paid off big for me. I used to use it in my floor trading days. I use it now. It's information that I put in my MMT trader report. So anyway, that's the market wrap. Dollar was weak. Hey, they raised interest rates. It's supposed to have a big rally in the dollar, right? Gold doing well. Hey, they raised interest rates. Gold was supposed to crash, right? Still, believe me, folks, when I tell you this, there's a lot of people out there, including many of you probably who watch these videos, are going to stick with that false, misinformed, wrong belief all the way till the very end. Okay, all the way till the very, like the people who predicted the dollar was going to crash starting way back in 2008 and 2009 when the Fed started to engage in its monetary stuff, and they stayed negative, and now they're all, the dollar's going to go up because they're raising rent. They're going to stay with the wrong thing. They're going to stay with the wrong understanding. That's how people are. That's how people are, and that's what makes it so easy for moi. All right, everybody, have a nice weekend. Bye-bye.